Hi, everyone. On today's Altimetry Authority show, we have a really special program. Rob, my partner in building this business, Rob Spivey, our Director of Research, is talking about energy crisis in 2025, what the AI bottleneck really is, and why FERC, FERC, is a four-letter word in the AI world now.
Let's talk earnings and favorite pastimes.
So let me just say, earnings
Wall Street
is
2.5x
because their compensation goes up.
Wall Street's wrong again.
So, Rob, we've been talking about the AI revolution for months and months now. I mean, last year, I think one of the buried headlines amidst all the Trump talk in the mainstream media is just what a big deal AI is and all the things that are going to have to happen for AI to happen. Where are we right now on the whole subject, Rob?
Yeah, I mean, right to your point, Joel. I mean, right, for anybody who's been paying attention, we started talking about, all the way back in Doge. One of the things that we circled constantly is we circled, remember July 22nd, remember July 22nd. And so what finally hit in late July, the AI action plan, right, that we had been talking about. And the big deal for the AI action plan was this was all about, right, for David Sachs to basically say, hey, how are we going to set the table for the U.S. to be dominant in AI? And what was really interesting was when you actually looked at the layout of it, there were three pillars, right? Pillar one was accelerate AI innovation. Pillar two was, get rid of things. And pillar three was, basically how do we figure out how to diplomatically basically become dominant? But what was really interesting was for the first and second pillar, the first things that they highlighted in the AI action plan. So for pillar one, which was accelerate AI innovation, the top of the list, the very first thing that they highlighted was remove red tape and onerous regulation. And then for pillar two, which was build American AI infrastructure, it was create streamlined permitting for data centers, for semiconductor manufacturing facilities, and energy infrastructure, which is the really, really, really important thing for everybody here. Because,
and Rob,
well, everybody thinks
this remove,
yeah, go ahead, Joel, yeah.
Rob, the first one, the remove red tape and onerous regulation, people thought, oh, it's just about AI, like AI regulation. And I think one of the points you made is like, no, this is all kinds of red tape and regulation issues that affect the whole infrastructure for AI to happen, not just like regulating AI software or, per se.
Exactly, right? This is about making it possible for everything that needs, all the lattice work that AI needs to build up, right? Joel, we talk about the idea of, right, the AI ecosystem and the idea of these blast zones. It's not just NVIDIA and Alphabet and Amazon. It's the layer outside of that is the people who make data centers, the people who are users. The layer out of that is the people who provide energy to this or provide service to this and everything else. And the whole entire idea is, to your point, for the AI action plan is to really get out of that. But the most important thing that a lot of people don't realize is the biggest thing holding back really what's going on from the build out of AI now. It's not actually chips and it's not data centers or anything. It is power. And it's the idea that what is going on right now is there's a whole lot of situations where we have companies that want to be able to build data centers, but there's no power. So for instance, right, last year, Talon and Amazon basically tried to come up with a deal. Talon is a utility company, tried to come to a deal to basically say, hey, we're going to sell power to Amazon for Amazon to be able to build the data center. And FERC, and for those of you who don't know, FERC is basically it's not even basically, it is the regulator for U.S. power. Right, and so they are the ones who basically choose what power plants can come onto the grid, when things get hooked onto the grid, what we're allowed to do from building interconnections, right, between different parts of the U.S. and everything. And FERC basically said, nah, you're not allowed to do it. And it's not just that, right? Northern Virginia, which is the largest data center market in the world, basically right now, if you want to build a data center there, literally it's 7 years to get a hookup. And right, we've seen countless examples of this where FERC has been throwing up blockers to make it impossible for people to be able to actually build the power plants that we need for us to be able to see exactly what we need. I mean, my favorite one, Joel, was So Santa Clara, right, literally the heart of Silicon Valley, so the heart of everything that's going on here, Santa Clara, because of the issues that FERC is not letting them build power plants, is basically saying, hey, any data centers that want to build, don't even come to us and talk to us until the 2030s, because that is the earliest that we're possibly going to do it. And so, Joel, I mean, this is the issue, right? It's that they're recognizing that that's a big problem.
Yeah, it's funny because, FERC, which I guess it used to be the Federal Power Commission before it became the Energy, regulation. Like, let's put the word
Commission
directly in it.
Yeah, exactly.
The historically, I recall at times people saying that FERC was greenlighting too many projects too quickly, and then the public would get angry about it. Right? I mean, so it's anytime you put in these bureaucratic things, in some cases it might be they were greenlighting stuff that some communities argued should not have been greenlighted. But what we've been seeing more recently is the opposite, which is that they're not greenlighting things that need to, and that they're slowing things way down. And that's the big bottleneck. When you think of a bottleneck for AI, would be the bottleneck for AI getting their energy needs, and then FERC shows up in the targets. No.
Yeah, no, you're exactly right. I mean, and the issue here is, right, so there's a couple different parts of the issue here. So, one is that the way that actually FERC has designed the ability for you to build a power plant means now for you to be able to even get in line to hook up a power plant to the grid literally takes 5 to 8 years. And so if you think about the fact that we are talking about the idea that most data says, by 2027 or 2028, we'll have soaked up most of the available excess capacity in the U.S.
Right.
I mean, literally, AEP is talking about how we're basically running out of literally power cables' ability to transmit power. But what the issue is so FERC basically creates a list that they let anybody who wants to sign up for to be able to get in line to hook up your power plant. And so the problem is each year you see this surge of people grabbing basically the next group of opportunities to hook up for interconnections. And what it often is it's financiers who are who are basically grabbing space to be able to set up a solar or a wind power plant. And there's a reason for this. Because what actually happens is, so for them, it's a free option. It's a call option. Because what they can basically do is they go and they say, oh, okay, so what happens is I just grabbed a spot for 5 years from now. Well, I don't have to, for a wind or a solar power plant, especially a solar power plant, I don't even have to break ground until 3 months before that actually is going to go up. So now I can wait, and I've got my spot in line, and I can wait and wait and wait, and when I'm 6 months out from doing it, I can be like, okay, does the math make sense for me to build a power plant, a solar power plant or not? And if it doesn't, I throw it back. But the issue is a natural gas power plant that takes 3 years to build or 5 years to build, well, now that's a spot that natural gas plant would have used to hook up that they can't, right? Or a nuclear power plant, right? 10 plus years. And so what's going on, which is really interesting, and this is what's exciting, because the AI Action Plan highlighted this issue. But Trump has already been doing a lot of tactical things to start to finally solve this issue, because what David Sachs and co really raising their hand made him realize, and what the administration realized, is we need to fix this. And the first thing that was really interesting, because this news came out just before the AI Action Plan came out. So for anybody, you may remember Project 2025, right? The big boogeyman that was, heading into the election. But the big idea of Project 2025 was getting rid of regulations that were needlessly holding up things. There's a lot of other stuff that people talk about, but that was the heart of it. And so David Lacerte, which is one of the key players in drafting the deregulation part of Project 2025, was just appointed to a vacant FERC seat. And that's really important because that just highlights how Trump is now saying, let's get the deregulators in place to solve this issue and get out all of the blockers that FERC is having that's going to prevent us from being dominant for AI. But it's not just that. There's also, and this was really important, that a lot of people didn't cover, because, my God, Joel, Trump has probably filed hundreds of executive orders at this point, executive actions, but Executive Order 14270 was about the idea of zero-based regulatory budgeting to unleash American energy. And why this was so important was what this basically said is any regulation that FERC or anybody else has that is going to basically, that they have to justify why that regulation exists. And if they can't justify it, that regulation vanishes. It's not like other people have to say, hey, you need to remove this regulation. It's they have to justify it. And this is big because this could unlock the ability for us to hook up power across the U.S. to really unlock AI, because this is the one gatekeeper right now in a really, really fast way.
So, I mean, Rob, with all the push into green, right, green energy over the years, and I of course, I have an answer in my head on this, but I know you have one. Why don't they just hook up solar and wind and put in additional batteries and put in gigantic battery farms, if you will, on top of the wind farms, on top of the solar farms? It's like all these farms. Why not?
Yeah, right. And I mean, this is, if you look, Silicon Valley has been, everybody there who basically is building these data centers has been talking about this idea of we want to be, carbon neutral and everything else. Well, the reason why is because if you need a data center that is working nonstop around the clock, you can't take the risk that you're going to have a cloudy day. You can't take the risk that you're going to either have a too windy day, right? Which people don't understand. It's not just that wind power turns off when when there's no wind. If it's too windy, your wind turbines can't run also. So you can't take a risk of in West Texas that the wind is too windy or not enough wind, and you have intermittence. And battery backup is like a decade and a half away from being utility scale in terms of what's really working. And so if you have a data center that needs to operate around the clock, because you can't just say, oh, hey, we don't need AI to be able to facilitate driving cars if we've got autonomous vehicles. We don't need AI to do, any of the things that we're doing in terms of security protection that, you now have AI doing because, the solar, it got cloudy. That's why you're seeing everybody lock up, existing nuclear power plants. You're seeing Amazon, right, announce deals, Microsoft announce deals, Meta announce deals, right? We talked a couple of weeks ago, Joel, right, about 3 Mile Island with Microsoft and then the Illinois power plant with Meta. The reason why is because they're like, hey, nuclear is this great solution that I know that it's going to be on perpetually. But the issue with nuclear, and this is the other side of it, it's not just green that's a problem, but the issue with nuclear is to build a new nuclear power plant takes 10 years. This chart here that we're showing is how many months it takes to build a nuclear power plant. It takes 10 years right now to build a new nuclear power plant, and we haven't really broken ground on any new nuclear power plants in years. And so when we talk about nuclear being a potential solution and part of the portfolio for a solution, it definitely will be for solar power, for data centers. But the fact of the matter is, if we want to do something to solve the next 3 years of issues, the next 5 years of issues, there is 100% another group of companies that is going to benefit. And that is, right, obviously natural gas. And this is what has us so interested. And so what we did, and Joel, you know this, so I'm not going to pretend that I'm pitching this to you. But so for everybody watching, what we did at Altimetry is we got together and we said, hey, we can see how big this story is. Right, that the fact that power is the blocker for AI, and we're about to unlock the ability to build power plants and to actually get power where it needs to get to take on the next leg of the AI boom. We were like, we need to put together a report on this and get everybody access to it. So we put together a report identifying a set of companies that we know are going to benefit from this. And for anybody who wants to know more, you can go to energycrisis2025.com. The biggest area that we identified is we identified two kinds of companies, was the first set of companies that we identified. The first were the companies that are going to build the power plants, because now that we can, we're going to. And that's construction engineering firms. But we didn't identify a whole bunch of construction engineering firms because of what this chart is showing you here. And so for everybody, this is our uniform accounting return on asset data. So the dark blue bars here are what in aggregate, all U.S. construction engineering firms' profitability was for the last 15 years. You can see it averages around 10%, right? It's basically plus or minus 10%. Those light blue bars are what Wall Street analysts forecast for those companies say returns are going to be. They're going to be 10 to 11%. What the white bar is what the market is pricing the companies to do. This industry as a whole, the market is pricing return on assets for these companies to get basically back to historic highs of 2007, 2008, 2009. Now, here's the thing. These companies actually might. They're going to have a huge surge of demand, but we looked at it and we said there's one or two that might be interesting, but this industry as a whole kind of actually is already pricing in some of this move. But then when you look at the other part of what's going to happen here, this is where we got excited. So, right, if it's not nuclear and it's not solar and wind, the biggest access that we have of raw natural resources that could power our country for centuries is natural gas. We've got more natural gas under the ground in the U.S. than anywhere else in the world. And so what this is return on assets for natural gas companies for the last 15 years. You can see 2016 to 2020 were tough years for natural gas companies, but normally 6 to 7% return on asset businesses. And when you get boom times like we got during the early stages of the Ukrainian war, the Russian invasion of Ukraine, you can see a surge higher in return on assets. But remember those light blue bars and the white bar. That white bar is what the market's pricing natural gas companies to have in terms of return on assets going forward. The market's basically pricing in return on assets to sit at the lower level of where it's been basically any time other than the bad choice of words, but nuclear winter for natural gas that we saw in the late 2010s. And so we look at this and we go, these companies are massively underpriced. So we identified a set of companies in the natural gas space that we think are going to be big winners from this deregulation event. And again, you can see it in Energy Crisis 2025, where we talk about all of this and the big event that's going on here and how you can profit.
And Rob, let me just say, I think, that there were a couple of ideas. First off, you did a great job on that seminar, that program that you get at that energycrisis2025.com. You did a great job on that. It really was excellent. I wasn't part of it. I get to sit back and listen for once. And
you were a part of powering the team, in fairness, Joel, in terms of the research that framed it. I just was the one who was forced to get on camera. I'm just saying,
I didn't have to be the front man. It was good to sit back and hear you deliver everything. It was excellent. And I think what we found was, yes, there are some construction engineering companies that look interesting, but for a large part, the world seems to realize that's going to happen, right? That they're going to be needed. For whatever reason, the demand for natural gas that we know is coming, that is the only way to solve the nation's energy needs, seems to not be priced in to the profitability of those firms increasing. In fact, it's as if it's an aggregate, right? It's being priced in. Now, that doesn't mean every company is being priced expensively or cheaply, but there are a number of them that are being priced cheaply, and the whole aggregate comes down. That's why I think it's a really interesting place for our subscribers to look at for the stocks to go after, and that's what that Energy Crisis 2025 is all about.
Yeah, exactly. And then, just for context, everybody, it's not also just that. We also identify that, look, the fact of the matter is, if you're going to see this kind of build out, there's going to be companies that benefit from this, from financing it too. And so we also identified a set of companies that we think are the banks that are going to be able to underwrite this also. And we put all this together in a straightforward package for you. You can see the full report where we discuss it on energycrisis2025.com. And then you can, if you want to get access to the reports, you can just hit subscribe and you can hear what are the companies that we think in the natural gas space, what are the construction engineering firms, and what are the banks that we think could power all this. And everybody, we just think that this is such an urgent issue right now. We highly recommend you check this out so you can make sure that you benefit from the next phase of the AI boom.
It was great research, really, really.